Meet John. John owns a vacation home in the U.S. He wants to sell his home, but he's not a U.S. citizen or a U.S. resident. As a foreigner, John has to deal with FIRPTA. Meet Mike. He wants to buy John's house. Since John is a foreigner, now Mike has to deal with FIRPTA too. So what is FIRPTA? FIRPTA is a withholding tax. A withholding is an amount that is set aside to pay for potential taxes down the road. Think of it as an advanced tax payment. When John sells his property, he will be earning U.S. income. When he earns U.S. income, he has to pay an estimated tax payment on that income. That estimated tax payment will stay at the IRS until John files a U.S. tax return. If he ends up owing less than what was paid in advance, then he will get a refund of the difference. Collecting the payment upfront is the only way the IRS can make sure that John files his tax return. But how does the IRS go about collecting that payment? Remember Mike? When Mike buys John's house, he will need to hold back 15% of the selling price and make a payment to the IRS on John's behalf. If Mike doesn't, he might have to pay the 15% himself. John called the specialist at FIRPTA Solutions. They explained the process and his option to either remit or apply for a withholding certificate. John didn't have a U.S. tax ID, so FIRPTA Solutions helped him to apply for one. A few short months later, John has his 15% back in his bank account where it belongs. So whatever happened to Mike? Well, Mike went on to live a happy life in his brand new home. He never heard from John or the IRS again. This story has a happy ending, but sadly, not all FIRPTA stories end well. How do you want your story to end? Call the experts at FIRPTA Solutions to find out.